Good evening. My name is Peter Resnicek from ShadowTrader.net. This is another edition of the ShadowTrader Video Weekly for Sunday, September 12th, 2021. Apologies for the lack of fancy intro, outro, and everything I've been doing in my studio with the desk and the big TV and all that. Just came down to a question of time. This weekend I had another presentation I had to do and just wasn't able to do the whole long form video. We'll go back to that next week. This video, even though it's shorter and not as fancy, for lack of a better word, is important because we now have potential for change. There hasn't been much change in the market in a while. We've just been kind of grinding in one direction, but everything changed a bit on Friday. And let's talk about that from a technical perspective and also a little bit of nuance as to why I think it changed. There was something very specific that happened this week that I thought was important, that I was watching very, very closely. So firstly, just starting with the daily SPX, we crossed the 20-period moving average, which is very, very important. That's the first thing. And we actually kind of sold off where we should have sold off, in that this is really still a channel resistance. We didn't break out of the channel definitively. We just kind of went sideways. And so, there's basically that opposing end of the channel where market was just getting a little bit tired. And I want everybody to keep this short-term channel in mind, because there's two specific targets in the market that I think we have potential to go to, which would be 4,400 and 4,300. In the title of this video is called I Bought a Put. I'll show you what that is in a second. True to my form, it's not all that exciting. Remember, I always structure in a way that's not going to hurt me if I'm wrong. So my put is an SPX butterfly, but I'll show you what my position is and why I put it on and where I think the market's going in the short term, obviously. So potential, I think, is there to at least see the top trend line, which is 4,400, probably by early or mid next week. But as I was saying, the important thing that happened this week was the loss of the 20. And I'm just going to actually take off these markings and blow this up a little bit so we can look at just that area very closely. And what I wanted to point out was the fact that we supported at the 20 earlier in the week exactly as we should have. And then we came down to the 20 again and we stopped there. And I understand that it's a little bit above, but obviously when you come this close, that's basically it. That was the touch to the 20. It doesn't always have to be exact, like this particular day or whatever. And then what happened is we rallied again a bit. And then when we came down to the 20 again, then we broke and we closed dead on the low. And that's important because it just clearly shows to me that the market was still acting like it wanted to have that 20 support. There were obviously shorter term bulls who were doing what they always do and buying that 20. And they defended that level for almost 3 full sessions. And that's very important because it plays into the concept that my mentor in the profile, Jim Dalton, talks about all the time. One of his Daltonisms, as I call them, which I like, they're phrases that he says that I've written down all of them, and I think they're just so valuable to have in the market. One of those phrases is very simply, understand that traders do what works until it doesn't. Traders do what works until it doesn't. Not long-term investors, not pension funds, not hedge funds. Those people just stay in it long all the time. They don't change because it's not working. They change because of, macro ideas that shift in their mind where they think, okay, now for the next 3 years, we should be positioned like this or whatever. So if you think in terms of what traders are doing, it's important to know, and I think traders have been controlling this market for quite a while now. The nuances of the market profile show us a lot of examples of how shorter term traders are really in control of this market. They were obviously buying this 20 multiple times and then it didn't work and then they started selling the 20. So I think that shorter term traders are now kind of switching sides a little bit. And again, I'm looking at potential of 4,400 or a little bit maybe just above that 4,300 for early next week. As far as what the put is, SPX here, my butterfly is this one, very simply. I am targeting the mid strike at 44.15 and my longs are at 44.40. I put this on for about $1.70 total, I think. And I'm not really worried about it because if you look at the amount of credit, this is how I think. And I kind of tend to think outside the box. So notice how rich this stuff has become as volatility has popped up. And the way I like to look at things is as the sum of their parts. So if I'm long this vertical and I'm short this vertical, do you see how there's plenty of things going on inside of this spread that I will very easily be able to recoup $1.70 from? I could sell more in the middle, very rich, $18. I can get rid of these. Boom, I could get rid of them Monday and collect $15. Of course, that would make no sense. It'd be too risky. But as we get closer to my expiry, which is just Wednesday, it's not that far away, I have plenty of options, and that's why they call them options, ladies and gentlemen. I have plenty of options to get that $1.70 back if I'm wrong. So I'm not really sweating it too much. But anyway, I did want to title the video specifically this week, I bought a put, because I don't know, I just kind of thought that'd be a funny title, because how long has it been since I've bought a put? I mean, it feels like forever. I don't remember the last time I bought a put or put on a trade that was like directional in nature, sort of, and was looking for some downside. And I'm looking for a little bit of downside coming up. All right, let's take a quick look at some other TA here real quick. NDX, not as bearish, still above the 20, but this also, I think, plays into the thesis that we go a little bit lower, at least early, because you're not going to come this distance from it and not touch it. And if we do test it, I would say that the NDX is not going to support until the prior highs, which also makes good sense because it's going to tie in right with the 50. So if we draw a line across, so let's talk about 15.2. If you want to look at something directionally in QQQ or in whatever QQQ level corresponds with that 15.2, that may be something that you may want to think about. I'll show you the RUT, although it's doing nothing. I just want to show it to you for the sake of, it is amazing to me how much, no matter what happens, it's all about this 2230 roughly. It just loves this area. It keeps going back, and this whole thing is just so long here. So we'll see. I would not make a bet on the RUT as far as going down to 2100, just because we're in the middle of the range. I don't like to start a bet in the middle. I like to start a bet at extremes, or at the very least, I like to start a bet to the downside if I've got confirmation that I'm breaking out of the middle. So, at least passing through the middle, getting into that lower half, that might make me think, okay, maybe I'll do something, but not yet. All right, next thing I want to show you real quick is just, is there confirmation from sectors and FANG+T? I talk, those of you who follow my videos every weekend, you know that I kind of like to look at the same stuff over and over in terms of my small universe and wheelhouse of what I think drives technicals. And what I'm a big believer that's driving the S&P, I always say this, is the 11 sectors that make up the S&P. And what I think is a big driver of the NASDAQ 100, which is NQs, is what is FANG+T doing, which is always very, very important. So let's just take a brief look at some of that, and we'll see that this week, for the first time in a while, things have changed a bit. They've changed a bit. We had huge rout in Apple and Google, and also Tesla to a degree, down almost 20. But mainly Apple and Google on a percentage basis just got hammered on Friday, and that brought the XLK a bit lower. And again, same thing is, you want to think in terms of potentials of why would this go lower? Not just because it's an ugly red bar, but where's my next level of support? Understand that prices are constantly being drawn to levels where there's value, to levels where time was spent, to levels where lots of volume was committed, right? And where was there plenty of value, as we can see in the XLK, where was a lot of time spent? What would you consider the value area, quote unquote, as if we were talking market profile? It's probably here. Also a break of the 20. So I think at the very least, you're going to see XLK move down to the 155 area. And of course, since this is almost 30% of the S&P 500, well, that's the reason why I think a little bit lower in the S&P. Let's look at some others. Healthcare. Boy, was I dead wrong about this one, right? Didn't I tell you last week that I was long the spread in XLV? Didn't lose much money. It was less than a $100 loss because I sized it properly and actually closed out of half of the position somewhere in here on a small rally. And then, there was only like 50 cents worth of debit left in the whole thing. So I just kind of let it expire. But wow, big turnaround in healthcare. This was a sector that if you look at just at the end of 385. So this is Monday here. If you look at this is Friday actually, because it was a shortened week. I apologize. This was a shortened week we just came. So this is actually Friday of last week. What a difference a week makes, in that Friday of last week, you were literally knocking on heaven's door, and now you've just completely fallen apart, not only taken back all of this rally, but look at this area here. Here's where the prior rally started. You had kind of a triple top. And again, could we go lower? I think so. Now there's just momentum to maybe take healthcare to the last pullback of the prior low. Usually that's what we consider a major support, because it's the support that precedes a higher high or precedes an all-time high. So potentially moving healthcare down to that major support. Again, that's a big percentage of the S&P, probably takes things a bit lower. Let's just run through. Communications, still holding. It's about 10% of the S&P, holding the 20. Financials, I think this is a bearish engulfment. Notice that you have two small bodies in here and then a little bit of engulfment. Not an overly bearish chart, but could easily go lower. And industrials kind of just grinding lower. And that's pretty much it as far as like the main sectors that you need to be concerned with. The other two, if I could, would really only be XLY, which still looks good, discretionary. It's really kind of a minor pullback, so that's kind of playing the other side of the coin. And also XLP, which is not looking as good, but again, kind of a more minor pullback. But I think that if there's going to be a driver here, but what would keep the S&P soft, I think it's going to be between tech, healthcare, and financials. All that in and of itself is half of the S&P, just that basket right there. So we will keep that in mind. All right, FANG+T, real quick. Again, keeping it kind of short this week. It's really like a tale of two cities in a lot of these stocks. Some look just fine, but some of them just look like they're falling apart. My main sort of MO here with all of these names, because as you know, this is the universe that I play in the most, both for day trading and for weekly options advisory and everything I do with weekly options, all that stuff. I like the FANG+T a lot. I also have a relatively small universe, a couple hundred stocks that I'll look at, but I really look at this stuff more closely than anything. My number one takeaway from FANG+T is basically they're not a buy right now. They're either toppy or they're all out just falling apart, and you need to just step aside. I mean, look at Apple. Apple was just horrific on Friday. Obviously, there was a little bit of news here with the App Store thing, but increase in volume. And again, you have to just think in terms of potentials. Like, why would you be a buyer here, given that the chart is kind of at the midpoint of the recent range? And if the momentum continues the way it is, and notice that the prior highs here did not hold, why wouldn't 140 be the next target? And if 140 is the next target, that brings the S&P lower, as we know. And if we look at the weekly, strong support at the 140. So if I'm looking at Apple and I'm looking to add to a position or initiate something new long, why would I do anything until I see 140? Just doesn't make any sense. I mean, you know, clearly the odds favor a move there. Again, always think in terms of potentials. I'm not saying this is going to happen. I don't have any bet on Apple. But what do the odds favor looking at the chart? Probably there. Let's take a look at some more. Google, pretty bearish week, but it's still so bullish that I can't really even make the case for where the buy point is here. All of the pullbacks here have been like 2 weeks, 1 week, 1 week. So it's hard to say, but obviously daily chart looking like it's breaking a bit. I would continue to watch that 20 MA. You know, could go lower. And then, you know, others are a mixed bag. Tesla's still holding up pretty well. Amazon's still holding up pretty well. Netflix, I would wait for it to build out more, not a buy to me. Facebook having some difficulty at that 385, 384 area, not a buy to me. Nvidia looks great, but needs more consolidation, so I would just wait. You know, but the bigger names that are going to get the most attention really are like the Amazon, the Facebook, Apple, and Google of the world. They're going to get the most attention, and I think you'll see that NDX will generally follow on to those names. All right. That's all for this week. Again, keeping it relatively short, no fancy intro and outro. Check me out at shadowtrader.net/options if you want to trade options with me. We've been having a fantastic couple of weeks in our advisory, and we very cleanly, for lack of a better word, sidestepped Friday's downdraft in that we did not have any long exposure in terms of big debits, except for Myrna, which we did great with. We bought a call vertical there and we sold for $8 and we sold it for $15. But even that, probably the strongest stock on the board. You know, now you're going to get vaccine mandates and things like that, which this stock loves. And, you know, to me, it's just more of a wait and see. And in this type of environment, I'd be kind of holding back on things. And my only real, you know, I've kind of pared things down a lot. And as I was showing you this SPX, this is kind of the bulk of what I've got on right now, because my opinion is really more of a kind of cautiously bearish to wait and see. And I'll just leave it there on that note.